Hello and welcome to BQ Prime. You're joining us on our special interview show, Bankable, where we're joined by Ms. Shanti Ekambaram, whole-time director at Kotak Mahindra Bank. Welcome, ma'am,
Thank you.
to our show. And firstly, Happy New Year. It's still a New Year phase that's going on. This is the second episode of Bankable that we're shooting, and we're with you to discuss Kotak Mahindra Bank, to discuss private banking in general, and the broader sort of macroeconomic scenario that we're in. So, ma'am, to begin with, let me start with the latest news trigger, which was the budget that came out. It's been a couple of weeks now. What do you think that does for the banking system in general? There were not that many big announcements specific to banking, but in terms of the infra spend and the other kind of announcements that the finance minister has made, what do you think?
So firstly, thank you very much for having me on this show. You know, banking very closely toes and is linked to the economy and economic growth. And there is one thing in the budget that surprised most people, including me, was the forecast of the GDP growth for next year at 6.4%. I think most economists prior had talked about anywhere from around 5.5% to 6%, right, growth. After what seems like almost a 6.8 to 7% growth this year. But when the budget sort of talked about the 6.4% growth, I found it interesting, and I think that is what will drive economy and the banking system. If I were to talk about 2 or 3 key takeaways from that, first is the infrastructure spend. See, if you look at India's economic growth, it is still very largely told by consumption. Last year was again very much urban consumption, and towards the latter half of the year we saw the rural consumption come back. So I think investment is still in fits and starts. While you have begun to see corners, you have not seen it run away. It's been more sector specific. So it is very important that the government continues to spend on infrastructure. And given the theme of fiscal prudence, I was worried whether we would see that kind of outlay.
Right.
But with the kind of commitment they have given, I think it's 10 lakh crores outlay in infrastructure.
Yes.
I think that's going to be a boost and a fillip to the economy. And everything actually rallies from there. To give you an example, if you build more roads, it's good for the trucking industry, it's good for trade movement, it's good for agriculture, it's good for, so you know, the whole consumption pattern comes down. Similarly, if you invest in ports, if you invest in various types of infrastructure, green energy, etc. So I think the whole infrastructure investment piece, will give fillip to growth, and growth will give fillip to the banking sector. I think the second area is really the amount of investment and upgradation of tech in agriculture.
Right.
You know, India produces a lot, but agriculture still contributes to a smaller percentage of GDP. I think we can be significantly higher. That requires technology, that requires sea change, that requires a lot of inputs and support.
Right.
And I think there was a lot of mention in the budget about that. That gives way to again trade, agri-financing, rural economy, which will do well. And it's very critical. The rural story is important for many segments and sectors to go. And if sectors grow, banking sectors grow. I think there is some money left in the hands of individuals through the small things that were done in the income tax. I'm hoping that they will consume, and that will lead to more opportunities. And last but not the least, there are many things, I'll only say these 4 things, is the whole concept of youth and skilling. See, India's demographics, almost 62% of the people are below the age of 32 or whatever, around the 30s. And if we can skill the youths, create more employment, the power that it unleashes again to the economy would be tremendous. And of course, the continued focus on digital, which is an economy by itself. So if I add all of this up, it means economic growth. If it's economic growth, it's good for the banking sector from a lending perspective, from a deposit perspective, from a transaction perspective, from a consumption support like credit card, personal loan, etc. So I think that's where I'd like, and of course, investment will give way to corporate lending as well.
Okay. Let's break this up, and I'll come to each of these. To begin with, on the youth skilling tax benefits that have been given to individuals, all of this put together, you've got a sizable retail portfolio as a lender. I'm just trying to understand what does the sort of map look like to you in terms of business opportunities, because everybody talks about the tremendous potential of retail. There's still plenty of homes where bank loans have not reached, and therefore there is that much of an opportunity. Is there really that much room that you're seeing as a lender?
So, there are many Indias. You have to splice a metro India, a next semi-metro India, an urban India, a semi-urban India, and a rural India. I think the penetration has been very strong in metro India, to a certain extent in the semi-metro India, but when you go to urban, which are very large markets, and of course semi-urban rural, the opportunity increases. If you look at the net debt to a household income or net debt to GDP at the retail level, it's still relatively small compared to China and United States. Because if you talk about the size of the economy, I'm talking about two markets. So I think there is place to go. What has happened post-pandemic is there was a pent-up demand, right, for housing. Plus, builders were sitting on a lot of inventory, which they needed to sort of give good discounts on, and you saw this whole huge rush. What you are seeing now in housing is more genuine demand and with the needs going up. I think housing can have secular growth for the next 10 years. And there would still be opportunity, because if you have to go by every Indian will have a house, because people have second, third homes, etc. It's a different thing. Urban consumption continued. In fact, this year, if you saw the first quarter of this fiscal, April to June, which are slow months, was strong. And people are beginning, again, certain pent up. Just look at the amount of travel. The travel industry has seen sea change in Q3.
Right.
Everybody's traveling.
Right.
Hotels, airports, aircraft, airlines, everything is packed. I think the urban consumption continues. And as long as urban consumption continues, opportunities for banks for lending in the retail side, for the transaction payment platforms like credit card, etc., will continue to be strong. So I think India's demographics is giving it the advantage of youth. India, second town, third town, if you go to the tier 2, aspirational class.
Right.
And as economic growth happens, I think the opportunity will only increase. So I'm saying at a big picture, net debt to household is still relatively smaller. The demographics is giving it the idea of consumption. The rural consumption has started, and that again gives rise to different buying tractors, buying vehicles, etc. So I think there is some way to go, and it has to do with all the various macro factors that we have.
Okay. I'm curious to understand, because retail has been sort of the centerpiece of a lot of private sector banking growth that has happened in the last 3-4 years. Considering that the network spread or the distribution outlets for private banking entities are still significantly lower than your public sector peers, how does physical presence, physical sort of distribution play into your strategy, as far as you as in Kotak Mahindra Bank strategy, as far as future growth is concerned?
Physical presence is important, but the density of the presence, which was important, let's say, 5 years ago, is no longer the same.
Okay.
Due to the leapfrog of technology,
Right.
acceleration post-pandemic.
Right.
I think technology had started disrupting, if I say the financial sector, making its way right from 2013-14. We launched our app around that time. I think it's been steadily increasing, but COVID changed that, and there has been a complete leapfrog. What would have happened 6 years ago is happening today.
Is it still hooked though? Is it still hooked? Is it still catching your customers? Because
customizing
becomes difficult.
No, I'm coming to that.
Yeah.
Customizing is based on data.
Yeah.
So let me give you an example. If, for example, in a place like Pune or Dehradun, anyway, if in the good old days I needed 50 branches, maybe I can do with 25 branches today, right? You need a hub, and then you can deal with spokes, you can deal with people. If you look at an individual, and that's the largest mass, today, how many people go beyond their mobile phones to do banking? The largest branch today is our mobile app. And we give this data out. 98 point something whatever percentage of savings transactions is non-branch, which is net, mobile, ATMs, and other alternate channels. So the individual customer is today not even coming to the branch to open his or her account. They can download an app, they can get a link, they can do it through video KYC, do their full KYC, or they can call a salesperson with a biometric app to their place of work. So the whole aspect of visiting a branch for opening my account or visiting a branch for doing my transactions has come down dramatically. So then you'd ask why a branch is important. There are 3-4 roles it plays. A, branch is a symbol of trust in existence, and I think trust comes from that. Second, business customers need branches. And third, there may be a few products that the customer may be more comfortable in meeting face to face. So maybe a home loan, maybe a very large investment. So you need to want to come to the branch for that, or just coming to a branch, right? So you need branches, it's an important part of your strategy, but I think the density has been supported by digital, and which is why I call it the great phygital strategy. It is neither only physical, I think only digital is a problem, only physical is a problem, but a phygital strategy is a win-win strategy, and it is changing the way banks, and whether you see global examples or local examples, look at this mix of physical and digital. The right interplay is very important. How and which markets you focus. For example, Kotak has been very metro-centric, but in the last few years we have gone beyond the metros, and we just craft our strategy based on that. Our business customers need branches because cash is still, whatever we may say, there's a lot of cash in the economy in various rounds, and that's how you modulate your strategy.
My question was also with regard to the rural play, because you've acquired a microfinance entity recently. The book is still much smaller compared to what you already have in microfinance at Kotak, but there is a large network of branches that entity comes with. Sonata comes with, I think, over 500 branches.
That's right.
How does that how does that look? Because as you said, you've started to go out of the metros and getting other geographies in. What about the rural piece?
So let's talk about the microfinance piece. We were not in microfinance till we acquired BSS, I think 2017.
Yeah.
It was a small company then, and we acquired because we saw that there could be an opportunity we were seeing around us. It's been an amazing experience. It started in Karnataka, but today we are there in Karnataka, we are there in Bihar, we are there in Maharashtra, we are there in Tamil Nadu, just started Gujarat. And we have found it to be an amazing business in terms of the customers. They're all women. Today we have 1.2 million women, right? And the way they behave and they repay, it's a very interesting piece. Except for event-based risk, it's a very strong business. We got the experience of building this business and we realized that there is an even bigger opportunity. Reason we went for Sonata is it gave us markets which are strong in microfinance, but we are not present. For example, UP, which is a very large market. It is completely fitting like a glove with our risk. Sonata is not there in any of these, right? Karnataka, Maharashtra, Tamil Nadu in any presence. But UP is one of the largest markets. Bihar, we are there, they are there. It gives us a stronger market share. Right? MP, for example, it's completely complementary. The areas where they are not there. It gives us about it's under 1 million customers, about 9 lakh customers. So together we are 2.2 million. Simply, it gives us access to UP and our ability to tap the northern market, Chhattisgarh and other areas which we are not present. So completely complementary strategy, just the right size. Even when we acquired BSS, it was very small. Look at the way we have grown. So we are able to digest, we're able to integrate and then grow the market system. Pretty exciting if you look at 2.2 million women customers doing well, and an amazing set of people. So that's the strategy.
So after you, a few other private bankers also tried this same strategy, having a microfinance unit either be part of the bank or be a subsidiary of the bank. They've not been as successful in terms of building a quality book. What's your secret?
I can only talk about ourselves.
Yes,
I can't talk about what anybody else has done.
Yes.
So it's like this. Kotak has always been two things: conservative and very focused on the kind of credit they underwrite and how they execute. And I think that difference shows in the microfinance business. It's a team, it's the execution, it's a very clear approach on risk-adjusted return. Okay, that's the simple mantra we follow in our lending business. You take risk, but for the risk, you look at whether you're getting the return. Right? To push extremes, home loan is the lowest risk.
Yes.
But it's low return. Microfinance is probably one of the highest risk, but high return. And you have businesses between. I think it just boils down to having your philosophy very clear, your targets very clear, the way you execute very clear, and your risk philosophy.
Is microfinance a sort of profit-driving business at all? Because there is a social component to it. There is a component of building the population of women who borrow from these entities. Is it all profit?
I'm saying you're achieving all the objectives, right? You're achieving the objective of financial inclusion, right? You're achieving the objective of women entrepreneurs. You're achieving the objective of a risk-adjusted return, right? Risk-adjusted return makes you profit.
Yeah.
So it is like normally you say, one stone, two mangoes, right? You can get many mangoes with this one stone. Why not? It's a great business. It's a business model to build.
Okay, let me come to the other piece of the business, which is now suddenly looking up. There is this big revival in wholesale lending that has come in. You're seeing infra, you're seeing services, you're seeing core infrastructure as well as roads, ports. All of these businesses grow quite rapidly. Entities are coming to banks. They're going to the bond market, international lenders everywhere. As a lender, when you look at these businesses, what is exciting? What to your mind is the business that, okay, this makes sense and this is where we need to be?
I think if you go look at the infra story, and again, the last 2-3 years have been exciting. Because, when you look at infra financing, there are 2-3 things that are very important. What is the sector? What is the asset? What are the cash flows? And who's the counterparty? I think there's been some very interesting, if you look at the whole renewable space, you have very large, conglomerates playing in that space. And once the, facility is up, it is a cash flow generating asset, right? So if you look at assets across, take infrastructure includes something like data centers. You talk about renewable energy. You'll talk about road assets. Once it's up, it is revenue generating. So infra is beginning to look very attractive, and we at Kotak actually have done a lot. Our model is very clear. We tie up a deal, we keep some, we distribute some. Right? And our distribution strength and structuring strength is one of the biggest skills. I think we're probably one of the largest and the best in the market. So our whole strategy on infrastructure is be clear about the sector, be very clear about the counterparties and the people. So both the asset and the cash flow, and where the cash flow is coming from, and the conglomerate or the promoter or the sponsor or whatever. You must know today that very large global sovereign funds are also sponsors. So it gives a lot of comfort. So we do financing, like I said, the way we do it, we structure the entire deal, we keep some and we distribute some. And it's turning out to be very interesting. I think it will only grow from here in certain specific areas, and that's what makes it interesting.
Okay. What has changed in terms of underwriting? And I'm not speaking about Kotak Mahindra in general. I'm talking about the system, because the system has not had that great of a luck in the last infra cycle that happened in India. What has changed in terms of underwriting now?
I think 2-3 things. I think capital and the kind of capital that's coming into these sectors, the quality of that capital is important. Second, the kind of sponsors that are coming in, right, is different. I think these two make a big difference. Third, I think including on, setting up the asset, getting the approvals, things have improved significantly. Ultimately, if you set up a facility, let's just take a road facility, if you believe between X and Y, Ahmedabad and Mumbai, and you're able to make sure you collect toll with FASTag, with, so there's no leakage, then the revenue, it makes a lot of sense. I think it is a world of difference between the early 2000s when infrastructure happened and many things did not go right to now, a lot of these changes.
Is there anything known as sunrise sector anymore? Because this was a concept that was promoted quite heavily in the last cycle. Now everybody's turned to this risk-adjusted return as a concept because it makes financial sense to be in a risk-adjusted return scenario. Are sunrise sectors still a thing?
See, within the same sectors, you can regenerate sunrise. I'll talk about the infrastructure. I told you why it is different. If you look at the renewable energy has been around for some time. But I think it's gathering steam in a very big way. And you can call it sunrise if you mean, because green energy, sustainability, carbon footprint, all of that is becoming important. So the environment, the governance, and people are very clear that they have to do it. So the kind of people who are putting it up today is very different from the kind of people who put it up in the early 2000s.
Yeah.
And that is driving the change. So you can say infrastructure and renewable energy, what is new?
Yeah.
But the way it is being done is a sunrise sector.
Sure.
The second thing is very interesting sector called data centers.
Yeah.
Suddenly you see the kind, you need its infrastructure. It needs place, it needs this thing, but it's pure cash flow, right? And global giants are coming in and sort of snapping up these places. It's again a very interesting sector. You'd say data centers always existed. I think there is a reimagination and reinvention in various sectors. And so you don't need to call it a sunrise sector, but it could be the sunrise way of doing business.
Okay.
Similarly, if you look at specialty chemicals, and I can go on and on. Agriculture will be the next big bastion in my view if all of that's
What
set
is
in
so
the
exciting
budget.
about agriculture?
I think the digital setup that they talked about, that we
Right.
will set up the digital infrastructure. See, the government has done a wonderful job in democratizing payments by setting up a digital infrastructure upon which people could build and utilization happen. I think they are thinking of something very similar in the e-commerce space. ONDC will help agriculture, farm to a table, and they are now talking about the farm sector as well. I think if some of this gets built, you'd find new opportunities.
Okay, one last question on the asset side of the story, then I'll come to the liabilities bit. But the asset side of the story, you've had this public sector entire enterprise, entire group of banks, which have been quiet for the last few years. They've had their own issues, their own struggles. Now they seem to have come out of it. They're also becoming more aggressive in business, in growing their balance sheet. Definitely not as fast as private guys, but there is some growth coming in there. Are you feeling as a lender this competition that's coming up, is that becoming more challenging because of the fact that they have a significantly lower cost of funds?
I don't know about the significantly lower cost of funds, but I think competition was always there in the wholesale segment. And which is why I come back to the concept of risk adjusted return. You know, we have let some deals go when you don't find the pricing appropriate. So I don't think it was never non-competitive. I think private sector banks itself are pretty competitive, and State Bank of India was always there.
Yeah,
right?
let's take SBI out of the picture.
They are the largest in the market.
Sure, but
right?
there's a whole host of public sector
There's been
banks.
huge competition always, and it has always been competitive.
Yeah.
So I always believe the more the merrier, and each bank has to look at its strategy, its cost of funds, its return expectation, and many people have different risk adjusted return and return metrics, and play within that. I can say that there seems to be enough opportunity,
Okay.
and you have to play where you want to play. The market is very large across the segments.
Okay. Come to the liabilities front. Now, the reason I brought up the cost of funds aspect is what is happening with private banks is a sudden CASA squeeze that's coming through. If you look at, yes, some public sector banks have also seen that, but by and large, they are sitting on a safer sort of CASA base. Private banks have not seen that pace of growth keep up. Is that becoming hot now, that space, the competition for low cost funding?
You have to look at absolute and you have to look at growth. If you look at absolute CASA levels and you look at the top few banks, they're still in a very comfortable position, right? We are at 53, whatever the last quarter. We were 60, 53. The others are in the 40s, various 40s, mid 40s, this 40, that 40, etc., which are not bad levels, right? When COVID happened, all banks received enormous amount of deposits, right? All kinds of money because they were seeking safe havens, and they happened. Banks were also not growing aggressively and expanding the balance sheet.
Yeah.
So you felt that. Once COVID started receding, you start the growth of the balance sheet. And you've seen private sector bank grow credit pretty healthy. So two things happen. You use the funds, and as balance sheet expands, your ratios also come down, which is why you think there is a degrowth, but absolute levels are still good. There's no question that there is a demand for deposits today, because banks are finding the credit growth opportunity after many, many, many years. Even before COVID, the slowdown had happened. If you remember, the economic growth was at about 4.5%, and many banks had slowed the growth given the risk environment. So I think you are seeing this kind of credit growth after many years, and banks have been using up the liabilities that they have for that, and it's reflecting in the profits of the banks. And in the last, I'd say 4-5 months or almost 6 months, banks have tuned their antenna for higher deposits.
Okay.
And in my mind, this will continue. Okay, each bank has different levels. There is no need, but the industry as a whole is having higher credit growth than higher deposit growth, and I think it will catch up because I think even credit growth you have different industry.
Yeah.
So somewhere I think it will even out. But you have seen banks go for deposit growth, and I don't think that's going to slow down at all. And this will continue whether it's a public sector bank or a private sector bank. Let me tell you, you just go and do some rate comparison, you'd find that the public sector banks are more competitive even on the deposit side as well than the private sector bank. But it is something that, so this, despite whatever issues you talked about, it's a basic model of the bank. Simple.
Yeah, yeah. No, the also the fact that there is some analysts have quoted it as some kind of deposit war. I mean, I don't want to be so dramatic, but the fact is that there is a fight, right? I mean, there is a scramble for deposits at this point. Does that make things a little more interesting on the cost front?
See, let's put it this way. If you're clear about what's the return you want and what you will do, just like I said, in the very large corporates, we've let some deals go when the rates are not being conducive or does not fit within your matrix. It is the same on deposits. Today, I think banks have scope to sort of raise the deposits on their cost of funds. But there may come a point in time where they may decide that I will grow so much and I will grow this thing, and that's what it is. I don't think we've reached that point as yet, but who knows, if the credit growth continues at this pace, who knows in the next 2 years. But each one will find their strategy.
Okay, let me ask you something on the on Kotak specifically. There is this, now words of analysts, not mine, so don't fire me, but the question here is that there is this sort of succession anxiety that people are talking about because Mr. Kotak's term is coming to an end in December 2023. That's the stated plan. What do you have to say to people who point out that there is this anxiety that who's going to succeed him, who's going to take over the reins?
This is a mandate which is of the NRC, of the board and the board.
Yeah.
So the board is the one that will look into it.
Okay.
Not someone like me. So I really have no comment to offer.
Okay, fair enough.